Let me bring in Clark Hodges, Chief Marketing Officer for Hodges Capital Management. Hodges Capital manages money for the high net worth individuals around our country, pensions and endowments, through its own family of mutual funds and separate accounts. Clark grew up in the Dallas area, ground zero, by the way, for Ebola, and his family calls Dallas home. Hey, Clark, welcome to the Blaze Radio Network on the Chris Salcedo Show.
Thank you, Chris. Good to be on. Thank you.
The Dow. The yo-yo that has been the Dow Jones 30 Industrials. First off, before the Ebola scare really started, because I know that Ebola is factoring into all of this, but let's take Ebola out of the equation just for a moment. Let's talk about oil. Let's talk about the ups and downs on the stock market. What's going on here?
You know, the stock market is really run by institutional trading, but a lot of it is run by computer trading. And over the last 5 to 10 years, the popularity of ETFs has really exploded. And for your audience to understand what ETFs and how they affect the market,
well, tell folks what ETFs are first.
ETFs are baskets of stocks, and they're usually industry specific. So you might have a bank ETF where it owns 100, 150 bank stocks in there, an energy ETF. You could have an ETF that represents the S&P 500, so it's 500 stocks. And what goes on really is when you get an order to buy or sell an ETF, that trader goes in and actually physically buys shares of all those stocks. All 500 stocks are purchased. And so when you have some panic selling going on and people are saying, I'm getting out of the market, and they primarily have money invested in ETFs, and they say, hey, sell me out of this $100,000 of ETFs, that's going in and selling every single stock in that ETF. So it has a snowball effect that kind of sends the market down in a very severe slant, but it also does the opposite on the upside. When things are going good and people are buying, everyone's going in and buying those stocks, it has a slant on the upside. So it creates a lot of volatility that really is a kind of misnomer, because it's just people getting out of their actual ETF. But every one of those stocks in there has to be bought or sold depending on the buy or sell.
So it's a lack of the human touch. It's because of the impersonal electronic nature of where stock trading is going to.
Well, we'll take it a step further. It really takes investment out of it, because if you have 100 bank stocks in an ETF, you can't convince me that all 100 of them are good investments at that time. Mm-hmm. But they're all trading in correlation. So from an active manager standpoint, you can say, you know, all 100 of these bank stocks are going this way or that way, but really only 20 or 15 of them are good investments. And when they sell off like they've done lately, then you can say to yourself, hey, this really good bank is now a better buy today than it was a week ago, and for no reason other than the market came down. There's no fundamental change in their business. And so it creates opportunity. And really things shouldn't trade correlated like that, because the bad companies, their stock trades just the same as the good companies.
Clark Hodges, my guest, Chief Marketing Officer for Hodges Capital Management. Clark, the government reported all-time take in tax receipts. $3 trillion the government took out of the private economy and put into its own coffers, and we're still running a deficit, but that's a discussion for another day. Primarily responsible for this, is it the health of American companies recovering, or is it the higher rate of taxation because I know liberals are smiling ear to ear seeing government getting all the money and sucking it out of the private sector, but something gives me a bit of unease about seeing that $3 trillion figure.
Well, I'm a big fan, a big proponent of we're going to spend our money better than the government will ever spend it. And when corporations are overtaxed, it has a negative effect. And you've seen the topic du jour in the last month or two has been inversions and companies trying to save money on taxes, and I don't blame them for that. But the recovery we've had in the economy has been a slow growth economy recovery, and the companies that are out there that made it through the recession have less competition today because of the fact that so many companies went out of business. So their revenues and earnings aren't growing at gangbuster speed, but their slice of the pie has gotten bigger so their business is better just because there's less competition today. And I think that's really why stocks are where they're at. Plus, corporations are sitting on their cash because they're not sure what Obamacare and other things are going to, how they're going to affect their future. So they're sitting on their cash, and then they're deciding, hey, I'd rather buy my own company stock than try to go out and expand my business with this cash because I don't know what the future holds as Obamacare goes. I did my taxes the other day, and I paid $4,000 more in taxes because of Obamacare. Mm-hmm. And that's a real number, and it affects companies as well as individuals.
Gotcha. Clark Hodges, my guest, Chief Marketing Officer of Hodges Capital Management. Last question, the Ebola factor. I don't have to tell you, but I want you to describe it to the folks. Because of the ineptitude, because the Obama administration allowed this to occur, Ebola to be introduced in the United States of America population, we already see airline stocks getting hit. We already see a pullback as nervous Americans are looking out there seeing an inept government, incapable of stopping this, being lied to at every turn. What if they don't get this under control? And there's no reason to believe that at this point they are, as we have nurses boarding airplanes and boarding cruise ships, and again Thomas Duncan being allowed to come in here from a West African nation to begin with. What the effect on the economy? Do you have concerns about what Ebola could do to this fragile economic recovery?
Well, at some point, if it continues like it's been going, and more people are infected and they're doing stupid things and selfish things like getting on a cruise ship when they know they've been exposed, then it's going to affect the economy by people's habits. They're going to stop going out to restaurants. They're going to stop going on airplanes. They're going to stop going to grocery stores, and that will definitely affect the economy in a negative way. I personally think that flights need to be stopped from Africa, and people who have been exposed or worked around or anything like that need to look at it as this is for the greater good. I need to stop my vacation plans on a cruise ship or what have you and stay home for 21 days. My gosh.
Yeah. Well, we all know this now, but the CDC, who had assured Americans that these individuals were being monitored and counseled as what to do is to stop the spread, it turns out they weren't. Clark Hodges, Chief Marketing Officer for Hodges Capital Management. They got a website, Clark, that folks can go to and check out what you guys do?
HodgesFunds.com.
HodgesFunds.com. Clark, appreciate your time here on the Salcedo Show on a Saturday. We're talking, you betcha, buddy. We're talking more Ebola on the other side of the break here on the Salcedo Show. Stick with me.